Hello, hello. Welcome to Latest Wealth, Mind, Money and Market. My dear friends, I'm a financial advisor as well as a wealth coach. I'm very happy to share some wonderful information. Hope this will be very useful for you. Because if you are already investor or if you want to invest amount in mutual funds or stocks, whatever it may be investment, especially if you are going to invest in mutual funds, is very useful. After watching only, start investing in mutual funds. Here we are going to discuss what the fund managers, they won't inform you about some mutual fund secrets. My dear friends, nowadays what happened? Most of the people are wonderful education and they are getting a wonderful jobs. They are putting a lot of effort. They are getting a handsome salaries. By the age of 20-25 years itself, people started getting handsome salaries throughout the world. Let us take into case of India. I have met a lot of people just by the age of 24, 25, 26 years itself, they started getting, some people are getting 1 lakh per month, 2 lakhs per month, 3 lakhs, 5 lakhs and 10 lakhs per month also. And such that, and not only they are making the money, they are more focusing on making more money. So that they are taking some extra step, they started doing extra effort. And some of the cases I have seen, whereas parents, they worked for around 25 to 30 years. After 25 to 30 years, whatever the salary they are making, whatever the paycheck they are receiving, if you compare with the children's paycheck, there is a huge difference. Some of the children I have seen, some of the youngsters, they are making almost 10 to 15 times more than their parents' salary. Whereas the parent is having experience of 25 years. This guy, he might have come out from IIT or IIM. But unfortunate, something is missing in their life. Of course, always it happens in the life. And these people, the new generation, they are very much interested in making more money. Some people, they are realizing the importance of investment. Of course, most of the people till date, they have not realized the importance of investment. That's why whatever the money they are getting, they are spending. Some people, they got the knowledge of investment, and because they are so busy from 6 days a week, they are unable to give the time. They start thinking, because nowadays mutual funds has become a very fancy word. Now they start thinking, however, I don't have any time, let me start investing in mutual funds, right? My dear friends, please remember, for centuries it has been happening in history. There are actually 3 types of people exist throughout the world. One is the people with zero financial IQ. Zero financial IQ. Second is people with just little financial IQ. Then the people on the top with high financial IQ. It is just like a triangle. Just see the triangle. It is just like a triangle. It is a formation of triangle. On the top, who are called very rich people, their percentage is very less compared to entire population. They are having a high financial IQ. Hardly 5 to 10% of the population of the entire world. Whereas lowest, they are called poor people with zero financial IQ. That's why they will not be having any money. They are not at all wealthy. They are always poor. And in between, the middle, almost maximum percentages, this type of people, they are having a little bit financial education. So their focus will be maximum on making more money. And they think, if I make more money, all my problems will be solved. And some people are savers. But unfortunately, one more point is missing, the investing. Of course, some people, they start thinking, okay, if I invest, I can make more money. And nowadays, what happened? Most of the people, they are aware about inflation. What is inflation? When they go and deposit in fixed deposit and bank deposit, government CDs, they are not going to give good returns. At least that awareness has come. Now what happened is, instead of increasing their financial IQ, they think, if I give it to my amount to one fund manager of mutual fund, he will take care, I can happily retire. My dear friends, I am not saying mutual funds are wrong, and I am not saying fund managers are wrong. Some of the fund managers and some of the advisors, some of the agents, they keep hiding some secrets they never disclose. Like this, I have been doing the research, and with the research, we made some list. What are the things they hide from you? Number one, they never say that expenses will eat away your returns. Yes, my friends, the expense ratio, whatever the expenses they occur, it will eat away your returns. And most of the people, they are not aware. If you want to know about full details how the expenses will eat away your mutual fund returns, we have already produced one wonderful video entire with all the details we have given. Please watch that video also, so that you will come to know how the expenses will eat your profits. However, let me brief out here. Because expense means, because you are giving money to your fund manager, on behalf of you, he is going to invest in the stock market. So for the fund manager and fund company, they incur some expenses like a staff salaries, office maintenance, advertisement cost, some legal issues, some record keeping. All these charges, they may charge you from around 1% to 2.5%. Now you may be wondering, only 1%, now what's going to happen? Let me give some brief calculation how much you are going to lose. How much you are going to lose, please watch one more video where there we have explained very clearly. Here I am going to give some briefing. Suppose you have invested 1 lakh rupees. Imagine you are getting 10% returns. So at the end of the year, what will happen? 1 lakh will become 1,10,000. That means suppose you have invested 100,000 rupees or $100,000. At the end of the year, with the 10% returns, it will come to 110,000. Yes? You think 10,000 is profit. Sorry, my friends. From that, they deduct, let us say, expenses are 2%. So what will happen is, they remove 2,000 rupees, so that remaining balance only you are going to get. So you will get only 108, 2,000, right? Imagine you lost 10% of your money, right? Suppose 100,000 you are invested, so loss of 10%, that means your capital has become 90,000 rupees now. In that 90,000 rupees, once again they will deduct 2% of that amount. They don't show you mercy, or they don't show you sympathy, or already he is in loss, why we have to cut amount. No, they are very clear. From the 90,000, they once again deduct 2%. That means 1,800 rupees they will deduct. That means you are going to get 90,000 minus 1,800, that is 88,200 rupees you are going to get. Actually, you are supposed to get 90,000, but they deduct their expense ratio. Like this, suppose the fund has gone for 4 or 5 years. That means one is you are putting already you are into losses. Moreover, he is going to cut his expense ratio. That no fund manager will tell you. So you have to take care how much expense ratio is happening in each fund. Let's go to next. When you go, if you want, you can go and check it out as a trial. Most of the people will be talking about NAV, 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 NAV. My dear friend, the second point is they never say that NAV is meaningless. Yes, my friends, NAV is meaningless. Please remember, it doesn't mean that it is popular, it is correct. Lot of things in our country, lot of things are very, very popular. It doesn't mean that correct. For example, if you see in government offices, most of the people are corrupted. Since most of the people are corrupted, it doesn't mean that it is correct. Same the way, if you go into any college, most of the students during the college age itself, they started having the cigarettes, they started having the liquors, alcoholic drinks. Because most of the people are following, it doesn't mean that it is correct. Clear? And if you see, especially some of the places, people are so dirty, everybody starts spitting on the road. Most of the people, it doesn't mean that it is correct. Same the way, NAV has become so popular, it doesn't mean that it is correct. Actually, NAV is meaningless. Sorry if I am hurting you. I don't want to hurt you. I want to give the clear information for you. What is NAV? Nothing to do with your returns. Most of the new investors, especially who are entering into new, they think less NAV means it is mutual fund is cheap. Higher NAV means they think mutual fund is costly. Nothing to do with that one, my friends. Actually, in mutual funds, NAV is having no value at all. What is NAV? NAV means total value of the assets divided by number of units. That's all. What to do with your returns? When you are doing the redemption, at that time it will give some value, not when you are entering. Let us see. For example, let us take it to two funds. One is A and another is B. A fund is having a NAV of 10 rupees. Suppose it increases 20%, then after some time the NAV will become 12. That's all. Whereas some more fund, let us see B, which is having a 50 rupees. If it increases 20%, that means the NAV will become 55. That's all. Nothing to do with the NAV, right? They don't tell you. But by showing the NAV, they start selling, and because they have been trained with some professional marketing people how to sell the product. Please remember, your advisor, he is working for his commissions, not for your benefit. He is interested in his children, not about your children's future. That please keep in mind. Next, let us go to third point. The third point is the fantasy names. My dear friends, the agent come with the fantasy names. They explain the meaning of the name, but they don't explain exactly what is meant by fund. Like for example, some people say that focus fund. They are not focused at all in the stock market. Some people, like some fund says income fund, some say a regular monthly income scheme, like a pension fund, and just it is a name only. No mutual fund will guarantee you 100% returns. And every document, that's what it is your duty. By going with a name, don't think, suppose something super returns fund. It doesn't mean that it is going to give high super returns. Not necessarily. That is only name. Because name, whatever the name they can keep. Like some people say gold jet funds or jet speed funds. They say, sir, jet speed fund is going to give high returns. Not necessarily, my friend. It's only pure name. Any mutual fund, they do same thing only. One is certain amount they go into invest in the stock market, certain percentage of amount they invest in bonds, certain percentage of amount they go with some fixed avenues. That's it. So don't fooled by the name of the fund. You have to check it out. What was the performance? Who is the fund manager? How to select the mutual fund? We have already created one more video. Please watch that video so that you can have some more ideas. Please always read disclaimer fully, and always in mutual fund risk is involved. Even though the fund manager says no risks, just you can invest and you can sleep in your house, we'll look after. Sorry. The same agent, same broker who is saying if you come after 6 months to the same office, he may not be there, he will leave the job and he may be joining in some other firm. But you will be in the soup if you are not reading through the terms and conditions. That is your job. So don't go with the name of the funds. Some people say high interest funds, interest-free funds, log this, because your mutual fund performance, especially on the long term, it depends on the interest rates of the Reserve Bank of India. So be careful. Now let us go to next point. They say that liquid funds offer risk-free returns. Not necessarily, my friend. In the liquid funds also risk is there, because it depends on a lot of factors because they are going to invest their money into stock market. Pure misconception. It has been publicized by the distributors and agents saying that liquid funds will give more returns. Liquid funds, they don't give more returns, because if you go into investment world, some persons say this is correct, some persons say this is not correct. That's why they keep on changing the fund managers frequently. One fund manager will come with one strategy, some other fund manager will comes with some other strategy, and when it is not matching with the fund management company, they remove him, they recruit some other person. So don't go with the fund manager's words, you do your own research. Now let's go to the fifth point, what fund managers or what the agents, they never tell you. Income or guilt funds. Income or guilt funds. They say really they are going to give wonderful results because this is a high income funds, you will get wonderful results. But reality is they will give good results when the interest rates are coming down. And now at present, whereas in other countries, it's okay, interest rates are coming down, whereas in India, interest rates, they are not much going up, they are not coming down much. So that in that case, we cannot expect exact as per whatever he is giving future probable expectations, because generally what happens, the agent and the broker, they will show you some of the fantasies, they will take you into fantasies, and they will force you to sign the agreement. Be careful in this one. Interest yield debt funds, they will give more returns when the interest rates are coming down, but that's why when you see debt funds and all, they charge high fees. Instead of that, better to invest in index funds. Now let us go to next point. Sixth is, they say ignore index funds, and they never recommend you to go with the index funds. The sixth point is, they never recommend you to go with the index funds. My dear friends, these are the some things what I was sharing with you. What fund managers generally, they never tells to any investors. Let me revise, let's have some quick recap. They never tell you that expense will eat away your returns. Generally, no broker, no agent will tell you, because if they say very clearly, immediately there are chances that you may drop. For that, you can watch one more video. Second point is, fund NAV is meaningless. Nobody says that fund NAV is meaningless. They focus more on the fund name, but they never mention that name is useless. Name is only to hit your emotions. They never explain about fantasy names, because they know that fantasy names will make the investors to invest more money. The next fourth point is, liquid funds offer risk-free returns. Next, fifth point is, income or gilt fund will start be giving. They will beat when the income rates are falling down. Never say, they will never inform you. Hope these points are very, very useful for you. When you are investing, please be careful. Let me tell you once again, do your own research, go through all the terms and conditions, read disclaimer fully, take time. It is not hurry. Today you are gone, within half an hour, you no need to give the check. And nowadays, a lot of information is available. Do your own research. Once you are satisfied, then start investing in mutual funds. So please, let me tell you, mutual funds, nothing but you are entering into stock market through the hands of fund manager. That's all. That means there is always risk. So, because in the mutual fund industry, only 10 to 15% mutual funds are making profits, and remaining maximum 80 to 85% funds, they are not giving positive returns, they are giving negative returns. So, hope this episode was very, very useful. My friends, please share this knowledge with your friends and relatives, and that's why you will be helping to avoid the traps of mutual funds. And thank you very much for watching. And my friends, we are going to create one more episode on this one, what fund managers never told you to any investor. That is part 2. Be ready to watch that part 2 also. Thank you very much. Till we meet again. Enjoy every bit of life. Have a nice day and bye-bye.